I'm going to share with you my personal 3 Singapore REITs that I am watching. So what is REITs? Real Estate Investment Trust, which is a very popular investments. Everyone, I believe, Singapore people that I talk to, they will always ask me about Singapore REITs because some of them do invest in the physical property, but however, physical property is getting expensive, and for people who are just starting to work or looking for retirement, they don't want to tie up with the commitments of the loan. Therefore, they are looking for a very affordability to access into property via these REITs, and that is why Singapore REITs is become so popular. On top of that, Singapore REITs also pay very attractive dividends as compared to other markets. So that is why there are many people begins to ask me about Singapore REITs after US Federal Reserve cut the interest rate. So interest rate is very sensitive to REITs because when the interest rate spiked up, okay, the REITs stock price come down. So that was happening 2 to 3 years ago, if you notice that. But however, recently, okay, you will also notice that REITs begin to rebound, okay, for the past almost 2 months. So some of you might say that, oh, REITs already expensive. I think if you look at the whole thing, all right, I believe REITs still have great potentials because, as you know, things is getting expensive, rentals is increasing, cost is higher, and obviously, indirectly the rental will be also increased as well. So who will benefit? Of course, the REITs. So the portfolio that the REITs company have, of course, will actually benefit from this, what we call that, the increase of the rentals. And therefore, you can see that Mapletree Industrial, okay, one of my favorites, all right. If you look at the current price, okay, current price is trading about $2.42, okay. It is not cheap right now, okay, because if you look at the chart, right, okay, since 2016, okay, until recently, all right, since 2016 the price was 0.96 cent, okay, as of today closing the price is $2.42. so the price has been uptrend since 2016 until 2020, okay. During the pandemic, that is when the price begin to what we call that, during the pandemic the price fall, okay, then after that it begin to rebound strongly, and followed by when the Federal Reserve announced to increase the rate aggressively, that is where the REITs begin to pull back. So for the past 3 years, so until recently, we have seen some rebound. Okay, so this Mapletree Industrial is quite interesting because they are actually involved in the industrial sector. So if you look at industrial sector, they are quite a number of international company actually invest in Singapore, and then they set up the HQ, okay, in Singapore as well. So of course they need space for their staff, they need space for their facility. So therefore, okay, the REITs like Mapletree Industrial will benefit, okay, from this situation as well, especially the US and the China trade war, okay, and most of the company, if you realize, that has moved to Southeast Asia. So among the country, of course, Singapore, Malaysia, Indonesia, and etc. So this international company, because they cannot, last time they used to have a factory, okay, they used to have a facility in China. So now because of the trade war, they are unable, okay, or we call it, there is a restrictions for them, okay, to export their goods, okay, from China to US. So therefore, they have to shift their facility to other country, like for example, Southeast Asia, okay, because why? Because Southeast Asia, especially, certain country like Malaysia, Indonesia, they still have a very low labor cost. But for Singapore, it's still at this, what we call that, services level. So if you look at the Mapletree Industrial, okay, we zoom in more detail about the what we call that fundamentals, I would say basic fundamentals. So if you look at basic fundamentals of Mapletree Industrial, all right, MEAU. Okay, so we look at the key strength first. Okay, the key strength indicated that the growing revenue and the income, and followed by very strong occupancy and the rental growth, which is a very key important for a REITs. And on top of that, if you look at the details, Mapletree Industrial Trust is a diversified portfolio REITs. They have 56 properties in US. They have 83 properties in Singapore and 1 in Japan. So again, if you look at the diversifications of the portfolio, of course, Singapore has the biggest what we call that portfolio right now. So AUM, asset of management, reached 9 billion Singapore dollars. So as of what we call that June 2024. So what about the revenue? All right, so the revenues it has been increased, and the most important thing we are looking at is the occupancies up to 91.9%. And if you look at the dividend yield, as of recently is about 5.5%. all right, as of 5%, 5.5% distributions yield or dividend. Usually REITs, they will pay 4 times in a year, in a quarterly basis. So, and again, they have what we call that obligations to pay up to 90% of their income to the shareholder. So this is one of the reason that's why Singapore people like to buy REITs, because of the very strict rules set by MAS against these REITs. And if you look at the REITs market, in Singapore, I think we have more than 35 REITs right now, but of course not every REITs is a good REITs. So that's why I have done my homework. I just list down my top 3 REITs that I believe still have the potentials, or you can put into your watch list and wait for the price to pull back before you are entering. All right, so this is a Mapletree Industrial Trust, and the other one is a CapitaLand Ascendas REITs. Currently the price is $2.75. Now, when we talk about REITs, right, of course we are talking about dividends as well. So when you look at the stock price, the price appreciations is actually not that attractive, because eventually REITs is about dividends. It's not so much about price appreciations. And therefore, if you are looking for retirements, or if you are looking for a passive income, or if you are looking for a consistent what we call then dividend yield distributions, then REITs might be suitable for you. But of course, you might want to diversify your portfolio like what I did. I do have a REITs, I also have a growth stock, and I also have ETF as well. So diversifications is what I learned from Warren Buffett. I do believe some of you are doing that right now. So keep it up, because investments is important for us, because inflations is keep going up, things become so expensive, and people like us will grow older, and one day we might retire. So we need to plan for our futures. So when we begin to think about futures, then of course we will think about the passive income. So when we think about passive income, of course we are looking for Singapore REITs, which I believe is one of the stables, what we call that sectors in Singapore. But of course, not every REITs is a good REITs, so we must choose the right REITs to be invest in. So CapitaLand Ascendas REITs is actually involved in the industrial as well. All right, the market cap is around 12 billions. 12 billions. So if you look at the price, of course, the price, it's not much about the price operations, it's more about the dividend payout. So let us zoom into the more details about CapitaLand Ascendas REITs. All right, so usually I will look at the key strength. So it's a robust revenues growth, and followed by healthy portfolio occupancy, positive rental revisions, ongoing AEI project to drive the future growth. So the rental revision is used by the REITs as a metric to measure the renewal of the lease for their customers. All right, and if you look at the key strength, the portfolio, they have around 229 properties. That's a lot, and it costs $16.9 billion. So the revenue growth is quite impressive for this kind of the REITs. All right, and then followed by MPI 528 millions. Distributions, what we call that per units is around 0.07.24. Most of the time, I do look at this portfolio occupancy. If you look at the occupancies, it's actually 93.1%, which is considered really good. All right, so that means the management of the REITs is doing a very good job, okay, to attract, okay, the customer, to rent their properties. So talking about the managements, they must be know the customer well. They must be know the customer requirement well, and therefore they come out with a design of the property that to suit the needs of their customer. So therefore you can see the portfolio occupancy is reach 93.1%, which is really, really good. Okay, so beside that, they also have this 6 ongoing AEI project worth around 572 millions. So this is of course will assist the companies to grow. And of course, when a company grow, hopefully as an investor like us, we are looking for a dividend yield to be increased as well. So that is why I like CapitaLand Ascendas REITs, okay, and which is one of my favorite as well. So the distribution yield is around 5.2%, okay, so which is good enough, okay, to cover our what we call that yearly inflations. All right, so 5.2% is good enough to cover our yearly what we call that inflations. And followed by which one? Followed by CapitaLand Integrated Commercial Trust. So one thing for commons, right? Okay, one thing for commons, okay, if you look at their stock chart, especially the REITs, okay, the stock chart, usually the pattern are the same. All right, because REITs, they are not looking for a price appreciations, and therefore if you look at the stock chart, okay, the price usually it doesn't really move aggressively. All right, most of the time they have a what we call that price of the swing, okay, swing up and swing down. And usually when the price swing up, right, I will not go and buy, okay, because for a REITs strategy, the best strategy for you to buy is when the price pull back. Okay, so that is why technical analysis will become very important when you are looking when to buy. All right, because these three companies, I believe some of you already know them. And the next problem that you are facing, I believe, is you are trying to look for a best price to enter. Okay, am I correct? So if you are looking for the best price to enter, then you must know technical analysis. All right, all price actions that I always share with you at the way that I teach you. All right, so right now if you look at the price, is already went up, okay, because of the what we call that of the Federal Reserve cutting the interest rate. And if you look at the price bottom at September, okay, I still remember, I think Federal Reserve announced cutting the rate on September 18, if I'm not wrong. All right, so if you look at the stock chart, okay, September was the bottom, and then after that, when Federal Reserve announced the interest rate, the price begin to rebound. Okay, the price begin to rebound, and until recently, do you notice the REITs begin to pull back? Okay, do you notice that the REITs begin to pull back? I think this 2 week. All right, one of the reasons could be because that the US dollar begin to appreciate. Okay, because if you look at the US dollar, when the interest rate is cut, the US dollar is depreciate. All right, and then the REITs increase. But recently, if you look at US dollar, in fact US dollar is appreciating. All right, appreciating. And when we look at REITs, the REITs become pullback. All right, so I think it's not a bad thing. It's for us as an investor opportunity to accumulate again when the price pull back. All right, so that's why I'm doing this webinar to remind you when the price is pulling back right now. Okay, so you are what we call it, you come into this webinar at the right time. Okay, if you are looking for a what we call that REITs. And like what I mentioned, I have a diversification portfolio, of course, including REITs and dividend stock, followed by growth stocks, as well as the ETF as well. So for CapitaLand Integrated Commercial Trust. Okay, they are involved in the retails. Okay, retails, and the market cap is around 14 billions. Okay, which is quite big, right? And if you look at the what we call that comparison, okay, the green color line at the right hand side bottom of the chart, the green color line which represent a CapitaLand Integrated Commercial Trust, he is still the leading of the what we call that REITs in as compared to other REITs. All right, so this is another REITs that I have in my watch list. So these are the top 3 REITs that I think, okay, still have the potentials by looking at the chart and by looking at the basic informations. All right, so you can put into your watch list, and of course wait for the pullback, okay, before you accumulate. All right, so if you look at the what we call that, the key informations, again, robust earning growth, and then followed by a very strong portfolio occupancy. Okay, if I'm not wrong, they are committed to around 96.8%, okay, occupancy rates, so which is very impressive. All right, and then the rentals revisions, very strong rental revisions, and followed by high tenants retention rates. So their management must be doing a very great job, all right, to retain their tenant. So if you look at their portfolio, they have 21 property in Singapore, 2 in Germany, and 3 in Australia. So AUM around 24 billions, which is quite big as compared to other 2 REITs that I have shown you just now. Revenue is growing. DPU, okay, distributions per unit also growing, all right, and occupancy also very impressive, and followed by rentals reversions. So rental reversion, like what I mentioned, is a key metric that used by the REITs to measure the customers' renewal contract rate, right? So it's around 9.3%. And rental reversions office, they have combinations of rentals of retails as well as the office as well. So their portfolio also a diversification portfolio. All right, so retention rate, wow, 85%, which is very good. Okay, and dividend yield, all right, is around 5.1%. All right, 5.1%, which is, I think, good. All right, so these 3 REITs, right, actually, if you look at the dividend yield, is more than 5%. Okay, which can cover the inflations, right? So if you are looking for more what we call that figures, okay, usually I will go to this XGX website. Okay, let me show you. So I go to the XGX website, okay, click on securities, and then click on price. I will click on the REITs. So there are many REITs listed here. So one of the REITs that I talking about is this one called CapitaLand Integrated Com. Okay, click on it, and then they will show you the informations at the bottom here. I don't look at all of the informations. Most important thing I want to look at is the dividend yield. All right, so in this web page, right, they will show the latest dividend yield by clicking on the valuations, and then they will show you the dividend yield is around 4%. Okay, probably because the price is already went up. And then I can also see the ownership of the REITs, which is also very important. I want to know who are investing in these REITs. Okay, I click on it, and then I see, all right, the Temasek Holding has the biggest percentage in the CapitaLand Integrated Com. All right, feel safe lah, feel safe. All right, when we invest into these REITs, because the Temasek also investing inside. So that's why there are some people willing to invest quite a lot of money, in fact, into the REITs, because they also notice that the Singapore governments, especially the Temasek Holding, has the share holding in this company as well. All right, so these are the simple informations that I'm looking at, because by looking at the company, we already know that the quality of these REITs is quite quite good. All right, and then I'm just showing you where to look for basic informations. And then dividends is actually telling us how many time are they paying the dividends, how many time per year are they paying the dividends. All right, so this is more of a very layman term of what we call that, look at the informations. All right, so I am quite old type of the people also, using this very old method to look for the informations. All right, so I just share with you how I look for the informations through this HEAD website. All right, so if you look at the dividend payout, all right, under 2024, okay, if you count, okay, how many times, okay, March, okay, September and October, okay, 3 times, okay, for this year already pay out 3 times, okay, for the dividend. So let us maybe go back to 2023, okay. Is that possible? Are we able to go back to 2023 or not be able to, or view more? All right, we can view more, okay, and then view more on the left hand side, okay, by looking at 2023, okay. Just want to know how many times they have paid out, okay. August, February, 1, 2. So this REIT is paying around 3 times per year. All right, am I correct? So if I'm wrong, let me know. All right, because I'm not good at the figure actually. Okay, so let me move back. Okay, all right. So these are the page that you can look for a REITs. Okay, there are many informations here. All right. So Kaplan Ascendas REITs. Okay. Linear Lim, okay, thank you. Let me share with you later. Good questions. So we look at the Kaplan Ascendas REITs, right? Valuations, okay, dividend yield as of now is 4.69% because the price already went up. Ownership, okay, Temasek Holding has 19% in the state. So at least when we buy, we feel safe, okay, because Singapore government's Temasek Holdings also buying, okay. And what else? So there are many REITs, okay, like what I mentioned. Please be careful, not every REIT is a good REIT. All right, so I just share with you the 3 REITs for today. Maybe in the future I can share with you more so that I can add value to you as well. All right, and what are the questions? Okay, let me see. What one cash option in dividend payout? Cash options, okay, good questions. All right, now in what we call that REITs, right, they will give you the options to choose whether you want to choose to collect the cash or you want the share. All right, you have a choice. Okay, you have a choice. So depending on your what we call that financial background situations, for retirement people who are not working, what I have seen is that most likely higher chance they will opt for a cash payout for people who are retired, who are not working. But however, for people who are still working, I notice most of them choose to to get a share, okay, instead of what we call that a cash payout. So it depends on your financial background, but I also believe that it does make sense if you are still working. All right, in fact, you can choose to get share, okay, instead of cash because you are still working, okay. But however, when you retired and it's not working, of course you can change the payout options to cash as well. So you can change in a later time, okay. By default, if I'm not wrong, is cash, okay. By default, okay, if I'm not wrong, is cash, unless you give an instructions to them. Usually you receive a letter. All right, so if you pick share, then of course they will change the payout to share, the difference between cash payout and the share distributions.